Good afternoon, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you Monday afternoon, March 9th. We're looking at the market profile of the SPY ETF here on Window Trader. And not a good day for the bulls at all, as we now have our second gap to the downside of over 600 points. This one is 604 points. The one back in February, 673 points. We get down to a very visual point, two monthly lows, got right to them, above them, rallied pretty hard off of them, only to come back and close just off the lows of the day. In fact, if it wasn't for the bell saving us, we probably would have had a price probe to the downside, but the bell saved us. It looked like after K made a new low and then we one time framed up in KLM that we might actually get a chance to close in the middle of the range. But nope, flushed out, and that was that. Volume today, right now, 290 million with the after hours. So it should be the second heaviest that we've had since all this carnage has started. 385 million was the most we had, and we did 300 million last week one day. We should get at least 300 million. Now, here's the interesting thing. Question is this long-term money that was selling this today? All we have as a reference point today, as far as I'm concerned, is our high and our low. Thought we might have an opportunity for 9 wide. We only ended 8. We one time framed down from the high today through K. At one point, it looked like, if you take off, if you look at this early on during the day, it looked like we could possibly have a P shape, right? Early in the day. So when G stopped the one-time framing up, thought maybe you look for an area to take a long here for an afternoon pullback low. But you shouldn't have held on to a long because it just continued down and made new lows. I had a good day today. I took 4 trades. I took a long in E period. As soon as we took out D's high, I went long. Got out of it right above B. Now I'm in 15 tick increments again, so it doesn't look like a lot, but it was a decent trade. I took a short in F period. I faded F. As soon as F took out E's high, took a short, came back and went flat somewhere. I don't remember where. Somewhere around B's high or right underneath, so that was good. I actually did take a long in G period, which worked out before it flushed out. And my best trade of the day, believe it or not, it happened in L period. When K came down and took out the low, I was looking to see if we were going to get extension or not. I had a bid in there to buy some calls, never got them, and it just turned around and ripped up higher. And I didn't want to chase it. So when L opened and came back down, it gave me a chance right above the opening. I took a decent sized trade. And literally in a minute went up. The option went up 45 cents in a minute and got out of it. So it turned out to be a really nice trade. And I did nothing in M period. Did nothing in A, like I said. I mean, A and B. I mean, I think on a day like today, kind of foolish to make a trade in that range until you get something, right? I had some semblance of what was going on here. That's why I took the long here in E period, right? D one time frame down. As soon as E stopped it, the odds of taking out the high were good, and that's exactly what happened, right? So same with the short. We had market-generated information. We were already 5 for 5 wide. The odds of it coming down were good. That's exactly what it did. I took the long in G. I didn't get hurt on it because I was looking for an afternoon pullback low. You know, so those are trades based on market-generated information as opposed to A and even B period on a day like today. I would not have done it. I just would not. All right. Let's go over destinations for tomorrow. Start with the downside first. So right now, we have 3 lows that are fairly close to each other and to me are very important as I'll show you on the charts. 273.45 is today's low. Then below that, we have 273.09 monthly low, and then below that, 272.42 monthly low. So 3 lows within $1 of each other. 2 of them are monthly lows. In fact, today, when we rallied hard, basically after we got above the opening and stayed up here, right? It looked like maybe we would put in a triple bottom, but the way we sold off today remains to be seen. Below that, we have 272.34 daily low, and then filling the gap at 271.89. That's an 85-point gap from February 12th of 2019. All these reference points on the downside are from 2019 now. Then below that, 270.57, 12 wide from February 11th, 270.03 weekly low, 269.41 afternoon pullback low from February 8th, and 267.83 monthly low. We'll stop on that. For the upside, first destination right now until tomorrow, we get more market-generated information and your pre-market high. Yeah, you could look at where we were 8 wide, but I want 9 wide or more. You could also look at M's low, high tomorrow. But right now, your firm destination is today's high, 284.19, and then filling the gap at 290.23, a 604-point gap. And then above that, we have 295.07, which was 9 wide from Friday, March 6th. So yes, I will use tomorrow, depending on where we're trading in the morning, reference points such as M's high, M's range. We might trade inside of it if we have some consolidation tomorrow and whatnot. Now, the reason I'm talking about, I don't know if this is long-term money, a couple of reasons. When we opened today, now again, we're down a lot. We're down 62 points from the all-time high. But if this was long-term money that was getting involved again, selling it, I don't think we would have opened, went down a little further, and then did what we did in A, B, C, D, E, and F. Maybe they're taking their foot off the gas, right, and letting it come back up. But the way it was forming and everything, again, they don't care about destinations or reference points. There's still profits in here. If they want out, they want out. So I don't think they would have let the market do this. So, and especially the fact that we stopped right above those 2 monthly lows, which are very, very visual points, tells me it was shorter-term traders doing it. Right? Those are very visual points. Long-term money wouldn't care at all, and they'd go right through those. Volume's excellent, and I'm not saying they're not in here, but they're not in here the way they pushed it down last week when we opened and just kept going down. Man, you would have single prints, right? You would have a lot of things going on. We didn't have any single prints. So that tells me that possibly this, believe it or not, with all this volume, it was only traders such as ourselves involved today. Now let's look at the charts. And they're not pretty. Okay, so monthly, which was in balance, the fact that we took out last month's low, monthly is now down. Right? We took out that 284.82 low, which had been a 5-month balance, and last month's low, took them out. We're now down, one-time framing down, and my next destination are those 2 big levels I gave you at 273.09 and 272.42. If they don't hold, then we're going to go to that other monthly low that I just gave you. And if that doesn't hold, look where we're going. We're going to go to February or January? January's low of 19. If those don't hold. So the monthly is down, one-time framing down. Weekly, with everything that's going on, let's not forget, we had an inside week. Well, that certainly worked to the downside. Inside week down so far has worked pretty nicely, right? Almost $20 from the low of last week's low. So inside week to the downside. We tried to rally. Like I said, early in the day, we got up to 284.19. Didn't even come close to the 287 level, let alone filling the gap. And now here we are, right at these very visual levels. Like in the monthly, you can see them even better in the weekly, here and here. I think they're important to hold. Weekly is down, gap, my main focus, inside week down. And then you have the daily. Pretty ugly finish to this day, right? I don't know why I have a line over here. Let's take it off. Okay, daily. We were in a balance, right? We were in that big balance. 7 days, I believe. Yep, 7-day balance, right? The high was on Tuesday. The low was that previous week's low. Well, we just came out of that with a vengeance to the downside. ugly looking daily candles. We tried to rally, and even later in the day we were rallying until we just gave so much back. So daily is down. Gap is my main focus. Yeah, not a pretty picture here right now for all three time frames. Are we a little overdone? Again, you're overdone when the sellers say it's done, right? This volume is still incredibly heavy. Whether it's long-term selling or short-term selling, the volume is still very, very heavy. So we were going to need to see a couple of days where maybe we make new lows and the volume really starts to peter out, where you get a sense that maybe, at least for the short term, the sellers are stepping away. But still no indication of that yet. So we'll see what happens. I hope you had a good day trading today. Again, there's no harm in just sitting and watching a market like this. You want to make sure you're there for the next day. Have a great night, rest up, and we'll speak prior to the opening tomorrow.